All of us are curious about the top-notch stocks to invest in, right? So, do you all want to know the top 2 stocks among the top-notch that are going to multiply 30-fold? Do you all want to know which are the 2 stocks that are going to keep bulking up relentlessly and tempting us to invest in theirs? Well, folks, no worries if you are not aware of it, since I'm going to reveal to you that top information in a while. Welcome to Fix Your Finances, Build Financial Wealth. If you want to build your financial wealth and fill your mind with the right information, then you are at the right destination. Make sure to hit the like button and subscribe to provide you with more valuable content. Alright now guys, let us go straight into the topic now without any further ado. There are just so many, literally so many stocks of various investors scattered out there. And of course, it is safe to say that many are doing fine for now, but not really sure if they would do the same in the next few years. But having gone through the statistics and portfolios of various companies, the future looks very bright for these 2 companies in particular, Amazon and Apple. Yes, these 2 elite groups are doing just fine and are set to cross their own record in the upcoming years for the way they are going to function. Amazon. While Amazon has generated significant wealth for long-term investors, the stock remains well poised to beat the broader market in the upcoming decade as well. When it comes to creating massive investor wealth, few companies have been as successful as Amazon. This technology giant has returned 2,450% in the last 10 years. It means a $10,000 investment in Amazon stock back in August 2020 would have ballooned to $245,000 today. In the last 20 years, these returns stand a staggering 8,400%. The stock price has been on a run as Amazon benefited from millions of people in the United States and abroad turning to online marketplaces to fulfill their essential requirements like groceries, food, toiletries, and medicines. In these uncertain times where companies are cutting pay and jobs, Amazon has raised pay and hired more than 100,000 warehouse and delivery workers, and is planning to bring in more as it struggles to fulfill the huge, unexpected rise in demand. At the end of April 2020, the company had a workforce of 935,000 employees. In early 2020 alone, the company recorded a 26% growth in revenue compared to the previous year. The COVID-19 pandemic has accelerated the trend towards online shopping, and it gave a significant boost to company sales in the last 2 quarters. In the first 6 months of 2020, Amazon's sales were up 33.5% at $164 billion. The retail e-commerce global sales are expected to grow to a humongous $6.54 trillion in 2023. While e-commerce is Amazon's largest business segment, it generates significant profits from AWS, that is, Amazon Web-Based Services. AWS derives revenue from global sales of compute, storage, database, and other service offerings for startups, enterprises, government agencies, and academic institutions. In the second quarter of 2020, AWS sales were up 29% year over year and accounted for 12.2% of total sales. However, this business segment's operating income accounted for 57.5% of total operating income. Similar to e-commerce, Amazon's cloud services business has also been immune to the COVID-19 pandemic. John Dinsdale Synergy's chief analysis states, "As far as cloud market numbers go, it's almost as if there were no COVID-19 pandemic raging around the world. As enterprises struggle to adapt to new norms, the advantages of public cloud are amplified." Amazon has several other businesses that are part of high-growth segments. It acquired Twitch back in 2014 for $1 billion to gain traction into the game streaming market and complement its video streaming business. Twitch is the largest game streaming platform in the world right now. Further, Amazon Prime Video also continued to benefit from the pandemic and business lockdowns. As most entertainment avenues were shut, the global populace turned to online content to keep themselves occupied. The company provides ad services to sellers and publishers through sponsored ads, display, and video advertising. In the last September quarter, Amazon forecast sales between $87 billion and $93 billion, which were higher than the company forecast of $86.3 billion. Amazon also beat quarter 2 consensus revenue estimates of $81.53 billion by fair margin when it reported $88.9 billion in sales. However, what surprised investors were the company's adjusted earnings of $10.3 per share, which were 600% higher than analyst estimates of $1.46 per share. Amazon is well poised to generate market-beating returns in the upcoming decade and has multiple growth drivers to drive its top line higher. Its forward price-to-earnings multiple of 105 times might raise many eyebrows, but the company continues to reinvest its profits into growth and expansion. Amazon has historically focused on top-line growth and sacrificed profit margins in its pursuit of market share. This strategy has helped the company gain leadership positions in several businesses and improve shareholder value. Further, analysts expect the company to increase earnings at an annual rate of 36% in the next 5 years, which is impressive. Apple. One key reason Apple stock is trading higher recently is simply the underlying market optimism for tech stocks in the aftermath of lockdowns. This unique environment has made technology more mission-critical for organizations and more relevant for consumers, prompting investors to turn to tech stocks like Apple as somewhat of a safe haven. But there are also 3 main company-specific reasons that have investors bidding up shares of Apple. First, some investors picked hope from the company's latest iPhone launch to pent-up demand for 5G connectivity, a feature the latest iPhone has. This could help the iPhone segment return to the revenue growth it saw before coronavirus lockdowns squeezed iPhone demand and supply earlier this year. Second, the company's wearables business is taking off, driven by fast-growing sales of Apple Watch and AirPods. This company segment saw record revenue of $6.3 billion in the second quarter of fiscal 2020. While this was small relative to $58.3 billion in total revenue during the period, sales in the segment grew faster than any other, rising 23% year over year. Third, and probably the most important, is Apple's rapidly growing services business. The tech giant's services business is its second largest segment after the iPhone, accounting for 23% of total revenue in the company's most recent quarter. The segment is not only growing faster than Apple's overall business, but it sports a gross profit margin about twice as high as that of the company's hardware sales. This fast-growing, highly profitable recurring revenue stream has convinced investors that the stock should trade at a higher multiple than when the business was more dependent on less predictable, lower-margin hardware sales. Shares of Apple have already climbed 79% over the past year, but will surge to new all-time highs in 2021. There have been long prognostications of a supercycle for the iPhone maker. It has an installed base of more than 1.4 billion active devices, with the iPhone accounting for an estimated 950 million of those. The current thinking suggests that as many as 350 million iPhone buyers could upgrade their device this year. To put that number into context, Apple sold roughly 185 million iPhones in 2019. Given the demand for a 5G-enabled iPhone, the number of devices due for an upgrade, it's certainly possible Apple could sell 89% more iPhones in 2021. But that's certainly a high bar. Beyond these entertainment, news, and financial services all delivered through the Apple ecosystem, an even bigger deal may be Apple's health initiatives. Apple's health apps already deliver heart, exercise, sleep, and menstrual cycle monitoring, as well as a number of other tools for doctors and researchers. In addition, Apple is collaborating on 3 new health studies this year in hearing, heart health, and women's health, which will use data from the Apple Watch and Health app for these studies. There's even more going on with healthcare at Apple. CEO Tim Cook boldly declared earlier this year, if you zoom out into the future and you look back and you ask the question, what was Apple's greatest contribution to mankind? It will be about health. These new services, all tied to the Apple ecosystem, should go a long way toward lifting Apple's status beyond a mere hardware maker to an all-encompassing ecosystem with lots of recurring revenue. Apple is going to transition to its next phase, tying the iPhone, watch, and other devices to an essential services ecosystem across entertainment, finance, and health. Each prior product evolution has led to Apple's stock surging to greater and greater heights, and I think its investors should expect more of the same this time around as well. In addition to ultra-fast 5G wireless connectivity, the 14th generation iPhones have improved cameras, speedier processors, and a new design. The Pro models of the iPhone 12 have a new rear-facing LiDAR scanner. LiDAR, short for light detection and ranging, permits depth sensing for photo and video applications, including faster autofocus in low-light situations. Plus, it will open up new possibilities for augmented reality experiences. Sales reports have been positive for the iPhone 12 series, especially the more expensive models. That news has buoyed Apple stock recently, and the Apple stocks are expected to grow many folds with the latest sky-high success it has had. That's it, folks. Let us know in the comments below if you're going to buy these two stocks. And make sure to subscribe and follow us on Instagram at fixyourfinances_. And see you next time at Fix Your Finances. Well, folks, with those two shiny pieces of information revealed, we have come to the end of the video. Take care and toodles.